The Fed decision lands at 2 p.m. Eastern, and WARSH'S first dot plot is the only number that matters for AI megacaps today. 4 more stories driving the tape. Let's get into it. At 2 p.m. Eastern, Kevin Warsh delivers his first FOMC decision as Fed chair. And the trade isn't the rate itself. CME FedWatch prices a hold at 350 to 3.75% at 97% probability. The action is in the dot plot and the 2:30 press conference. Analysts broadly expect the committee to erase the lone 2026 cut that survived March's projections. A hawkish reset AI megacaps have been pricing in since Monday. NVIDIA down 2.4%. Tuesday on no company-specific news is exactly that to risk. The bear case. Warsh delivers a hawkish dot plot and a less is more guidance style. Implied vol spikes and long-duration AI cash flows get repriced lower. The signal to watch. Warsh has publicly argued AI productivity is lowering production costs, giving the Fed cover to tolerate higher inflation. If that phrase shows up in the presser, the megacap de-risk reverses fast. If not, the drift continues into Q2 earnings. NVIDIA priced its $25 billion high-grade bond offering Monday and drew approximately $80 billion in orders, a 3 times cover, and the largest AI-linked debt print on record. The proceeds are explicitly tagged to AI financing. That gives JENSEN dry powder to underwrite the Blackwell to Vera Rubin transition and the trillion-dollar order book he flagged at GTC. Debt financed, not equity diluted. Why it matters. This is the first AI megacap deal that meaningfully tests global high-grade appetite for AI CAPEX paper, and the answer was unambiguous. The bear case, a 3.4x cover, doesn't mean infinite demand. Hyperscaler issuance is queued up behind this. Microsoft, Meta, Google could collectively tap $50 billion or more this quarter, and the primary market gets tested in real time. The signal? If Microsoft's next debt deal prices inside NVIDIA's curve, the AI CAPEX thesis just earned a credit upgrade in the bond market's eyes. GPT 5.6, which has been tracking a vague June window all month, just sharpened to a hard June 23 launch. The catalyst, an internal memo from OpenAI chief scientist Jakub Pachocki calling 5.6 a meaningful improvement over 5, unusually specific language for OpenAI pre-announcement messaging, where the house style is modest or incremental. 2 headline capabilities matter. A 1.5 million token context window that beats Google's Gemini Ultra at 1 million, and a step function gain in agentic coding. Polymarket reprices the launch window to 83% probability. The bear case, GPT 5.6 is a 0.1 increment, not a 6.0 release. If the agentic coding gains underwhelm developer benchmarks in the first 48 hours, the IPO narrative slips. The forward signal. GPT 5.6 must ship clean before Sam Altman accelerates the S1 process into H2. A clean launch on June 23 is the green light for the OpenAI IPO machine to start running. SpaceX closed Tuesday at 201.80 with an intraday tag. 25.64, setting a new all-time high. That's plus 49.5% in 9 sessions from the IPO close at 1:30. SPCX is now a standalone $2 trillion equity, bigger than Tesla's roughly $1.2 trillion market cap. The Musk complex has flipped, and Tesla is now the smaller leg. Why it matters. COO Gwynne Shotwell flagged last week that a Tesla-SpaceX tie-up might make Elon's life a little easier. That comment used to be a throwaway line. Today, with the SPCX TSLA spread widening every session, it's a live arbitrage trade. The bear case. SPCX is up 49.5% in 9 sessions, with no fundamental catalyst beyond IPO supply absorption. That's textbook momentum on momentum, and the unlock cliffs are coming. The forward signal: if SPCX prints a 230 handle before quarter end, expect Tesla SpaceX merger headlines to move from speculation to formal board discussion. NVIDIA signed a partnership with data center operator IREN, an option to invest up to $2.1 billion in IREN equity, plus a 5-gigawatt global AI infrastructure deployment pact. Texas's Sweetwater facility is the flagship. The pattern matters more than the headline number. This is the third deal in 6 months where NVIDIA takes minority equity to lock in tenant of record relationships at hyperscaler tier capacity, the $40 billion BlackRock aligned deal in February, the $5.2 billion APLD lease earlier this month, and now IREN. JENSEN is bypassing slow hyperscaler co-build cadence with vendor-financed AI factories. The bear case: this is the same circular financing critique that hung over OpenAI's compute commitments. NVIDIA equity goes in, GPU revenue comes out. The forward signal: if Microsoft's hyperscale CAPEX guide softens on the next print, IREN-style capacity becomes meaningful share of incremental NVIDIA revenue, and the $85 billion bond demand we opened the show with gets exactly the use case it priced for. The through line today: capital is flowing to AI infrastructure faster than the macro is willing to validate it. WARSH decides whether long-duration tech can breathe at 2 p.m. NVIDIA's bond book and IREN deal say the CAPEX wave is real. If you trade this market, subscribe. We cover this tape every weekday. This is the Daily Alpha.